Good morning. Today we'll have a comparison between two stocks which have, some sort of impact on the railway industries. Both these stocks have some, products that are specifically designed for the railway industry. India's railway sector is gaining momentum. Companies like Kernex Microsystems and HBL Engineering are emerging as the key players in the niche high growth segments, while Kernex focuses solely on railway safety systems. HBL boasts a diversified portfolio spanning industrial batteries, railway, and defense electronics. But which company is better positioned to capitalize on the current market trends? Let us take a closer look. Price moment. Market cap 2180 crores, a smaller company, while HBL has a market cap of 16,380 crores. Price of Kernex is about 1,300 rupees, and the price of HBL Engineering is about 591. KMIL manufactures and sells railway safety systems and software services with a plant located in Hyderabad and a branch in Cairo, Egypt. Its focus remains on rail safety equipment uh, service segment, which serves as its business segment. Uh, Additionally, Koenix has a presence in other areas including telecom and defense. Some key project execution: embedded Internet of Things solutions, product design and development services. HBL's principal activities comprise of manufacturing different type of batteries: lead, acid, nickel, cadmium, silver, zinc, lithium, and other railway and defense electronic other products. As of order book, you can see 2,124 crores order book, uh, including 1,730 from Chittaranjan Locomotive Works, 179 crores from Southeastern Railways, and 788 crores from joint venture products, ventures and consortium-led engagements. In comparison, HBL's total coverage orders stood at about 3,763 crores. Company is one of the selected few involved in executing coverage orders for the Indian Railways, along with industrial players such as KEC International, KMIL, Railtel, and Siemens. The company projects its total sales for FY26 to reach 3,000 crores. We'll go through the financial performance in a bit. Important information: all investment opinions and recommendations are those of the broking houses, experts, and rating agencies. These views do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a financial advisor or broker before making any investment decisions. So, this is the logo of Kernex. Then, this is the current price: 46% return in the last 1 month, 14% negative return in the last 6 months, and 221% return in the last 1 year. So the company just started doing well and started having a good amount of revenue growth in the last 1 year. We'll go through the financials. Sell safety systems and software solutions to the railways. Price to earnings of 44, which is high. Book value 94, which suggests that the company is trading at about 14 times its book value, which is very high indeed. Return on capital employed is 23%, and return on equity is 38%. Face value is 10 rupees. Promoter holding is 29%, which is low. Low return on equity of 1.3% in the last 3 years. Debtor days have increased to 45 days. Huge jump. Uh, Delay in receiving payments. Promoter holding decreased by 5.4% in the last 3 years. You can see in the last quarter, so revenue has jumped from 37 crores to 83 crores, and net profit from 7 crores to 33 crores, which adds a good value. You can see there's 46% return in the last 1 month. It is basically because of this strong Q4 FY25 results, which have led to a good profit growth and growth in value of the stock of the company as well. You can see sales from 20 crores jump to 190 crores overall. So that and for the first time, the company has turned profitable in the financial year from a negative of 17, 20, 27 over the last 3, 4 years. It has clocked 50 crores positive return net profit, which helps overall future and expected to do well in the near future. So you can see stock price growth of 236% in the last 1 year, profit growth of 290%, sales growth of 868%. So nearly 9 times increase in its revenue, and return on equity from 1% it has jumped to 38% from a negative of 11% 10 years ago. It has jumped to 38%, which is a substantial performance. So this is the company that has been doing well in the last 1 year, and possibly with the current order book of about 2000 odd crores, it is expected to continue doing well over the next 3 to 4 years. You can see borrowings have increased, which is a little bit sort of something that the company will need to keep a track of. Reserves have grown to 140 crores, which again is a very good positive sign. Other liabilities overall have also grown, something to keep a track of. Incorporated in 1991, so earlier it used to develop, software packages with the particular applications in different names like Flickr, ELX, Matrix, eDocs. Then it started distributing. The solutions were to reduce the dependency on paper information and store all the information on electronic form based on Windows NT and 95. Then it offered some back office administration reports, a virtual ERP. Then in the domestic market, also developed some data acquisition systems for the railways in various different stations between 1997 and 1999. Uh, Functional requirements of clients and operational safety procedures have been fully considered. Designing of logics of anti-collision systems based on the concept and domain knowledge provided by the Konkan Railway Corporation developed networked anti-collision devices. So this is how they ventured into the year 2000 with a memorandum of understanding for technical collaboration of anti-collision systems for the Indian Railways, or a particular Konkan Railway specific. So this is HBL, this is the logo, 5% return in the last 1 month, minus 5% in the last 6 months, and a minus 5% overall in the last 1 year. You can see manufactures and services different type of batteries, e-mobility and other products. Stock price earnings of 60 is very very high. Current price of 600, high of 740. Face value is 1 rupee. Return on equity is 20%. Return on capital employed is 26%. Stock is trading at 11 times its book value. Good profit growth over the last 5 years, which is 65%. You can see sales have been erratic for the last 4 quarters, and net profit has reduced from 80 crores down to 45 crores, which means high amount of expenses and the returns not meeting the expectations of the market in the last 2, 3 quarters. Net revenue is on a downward trend. You can see overall revenue has been low in the last 1 year. There was a peak of about 40% growth, revenue growth between FY23 and 24, and similarly, there has been a decline in about 11% revenue over the last 1 year. So net profit, though net profit has remained more or less same as for the last 2 years, which again suggests that the company is able to manage its operations well with even lower revenue. It is able to get better returns in managing its operations, which is a positive sign for the company in the years to come. See, lead acid batteries, nickel cadmium batteries, specialized different batteries, then lithium ion batteries, other battery technologies. Apart from that, battery chargers, switch mode rectifiers, battery monitoring systems, earth leakage monitor, railway and defense electronics, train pollution avoidance systems, and train management systems are the two important aspects from the railway point of view. Then there are some other products in services, thermal batteries, electric drive, train kits for uh, vehicles, various different other solutions with batteries again, specializing in that particular segment. That is it, friends. Let me see. Yeah, that is all for today. Thanks for watching the video. Please share this video with your friends, family, and associates, and please comment and let us know how you like the overall presentation of this information. Comparison between two companies would help you determine which stock seems to have good, better growth potential, and in terms of how you know information can be compared with the products and what kind of segments that the companies operate in. So multi-segment companies could have multi-segment values of growth opportunities. However, there would be certain industries which would do and fare well, and some of them may not be as attractive as uh, the others may be for the exchange company. So again, you need to keep a track of what sort of products the company is dealing with and how it is going to be looking into its future growth options and what sort of investments and changes that the companies can make into those segments. So thank you for watching once again. Please consult an expert before making any investment decisions based on this information. However, the expert would be able to give you a better idea on what sort of future growth opportunities those companies can provide. So thank you for watching once again. Take care. Have a good week ahead, and we'll connect with another video tomorrow. Thank you.